All right, Rohit Srivastava is joining us this morning as well. Rohit, let's get chatting about markets and policy, but before that, a quick check on Hero since we're just discussing those earnings. What's your outlook on the stock?
No, I don't really track Hero Moto, within the auto pack, but I do see that, Tata Motors among those is one of the most oversold. And if at anything, I would probably look at, buying into Tata Motors.
All right, fair point. In fact, I'm going to get to that in a few minutes in terms of details there. But Rohit, before we get moving as far as market strategies and market outlooks concerned, what do you expect from the RBI today? I mean, that's going to be the single most important factor over the next few hours. What kind of an indication are you picking up in regard to the way the market's been panning out over the last couple of days, and also the kind of commentary that we've been reading on the macro front as well, Rohit?
Yeah, I'm surprised polls mostly say that, he won't do anything. But if I just look at, the entire environment, whatever he may have wanted seems to be there to at least, go ahead with one rate cut at this point. So I think it's actually a possibility that he would do it, even if you see the cues that he's getting from, the government in terms of the fund infusion into banks, which has been one of the key reasons why, banks are not able to pass on rates. The cost for them actually goes up because of the NPA problem. So having, done something on that front also actually helps in terms of getting the RBI to actually move towards lower rates. So I think there's actually good reason for him to at least do a 25 basis cuts. So I think that's the indication, and the market has taken that up because you can see how all the banks have been performing over the last couple of days on the back of that fund infusion, and I think in expectation that, rate cuts would start happening.
Then the follow-up to that is basically, you're saying market somewhere is pricing in a rate cut. If you do not get that, what kind of disappointment do you believe the markets will see? What kind of levels do then start coming into play?
Yeah, so the most important level, technically has been the 8660 mark. That's around 61% retracement of the fall we saw in the previous quarter between March and June. And we couldn't get past that in July, so that was a concern which was showing a sense of weakness. If we don't get a rate cut, I think the chances are we'll probably stay below that, and you could see selling pressure, pick up again. And if you do get a rate cut, then it's possible we get past that mark, in which case we'll probably go to the next level, which would be around 87.80. So without a rate cut, my sense is getting past 86.60 in the short term might be difficult, and you could probably see a market reaction on the downside. And on the downside, the key level to watch would probably be 8484. And if we do break that, then I think there would be further weakness below it.
We've seen commodities take a bit of a hit, overnight, especially Brent and, of course, Rohit. But I know you're pretty negative on the commodity pack as a whole. I'm sure metals also on that list, also given slowdown concerns in China. Just run us through your take there.
Yeah, so metal stocks have been in a downtrend. I think that probably won't change. They can get a little oversold. We should be in at least one final round of selling as far as crude is concerned. I had a target of around $42 a month back, and we're pretty close to that now. We're at 45. We can undershoot maybe till 38. I'm not sure about that, but once we get there, then I think we'll start looking for a possible counter trend move in crude itself. But while this move is on, I think the key beneficiary remain the oil marketing, companies that get lower oil prices. And on the other hand, you would have to continue to remain negative on, metal stocks, which includes Hindalco, Tisco, Sesagua. They've been under pressure, and I think that pressure would probably continue on that entire sector.
All right, fair enough. In regard to the way some of the other cues have been panning out as well, on the currency bit, it's going to be important, right? I mean, the way, on one hand, if you're talking about the way oil prices have been panning out, they've been declining, but it's going to be important for the rupee to stay at this current level for those benefits to really play out, because if you start seeing the rupee weaken as well, you believe he'll start taking out some of those benefits?
The currency is a little tricky, because when you actually cut rates, typically you should see the currency weaken. And what we've seen sometimes is in the short term, at least for a few days, it tends to strengthen and then weaken after that. We saw that both in March and prior to that. So even in March, for 2-3 days, it was stable and then it started to weaken from there. So my sense is that you're close to a very important level. 64.25 is the mark. We've come here twice, and both of the two previous occasions we couldn't get past it, and we started to strengthen again. So I'd really want to see whether it gets past this, but I think a rate cut would eventually help it in breaking past the 64.25 mark, in which case then we would start looking at around 65.80 as the next possible target in the near term for the USD INR. So I think there is a potential for upside on the USD INR, not just from the domestic factors, but also globally you're seeing a dollar rally across the board. And I think that will eventually call for a weaker currency. So we probably move towards that. We've been hearing, from the finance ministry also comments coming from time to time that we need a weaker currency. So I think we are going to be moving towards a weaker currency. The only thing the RBI is doing is probably keeping it moving very slowly. We aren't seeing a lot of volatility. You see 10 to 20 paisa moves only a day, which is pretty thin. But I think the direction would remain up.
All right, let's continue our conversation with Rohit Srivastava as well. Rohit, counting down to policy today, of course, we spoke about some of the levels that you're tracking as well. But just to recap, for those that have just viewed in, what are we watching out for as we head into trade today in terms of market direction?
Yeah, so the main levels that we're looking for is one is 8660, which is the 61% retracement mark of the entire fall we saw in the previous quarter between March and June. If we get past 10, then 8780 is what we would look at next. On the lower side, I think 8484 is very important. That's the 20-day average and also particular swing supports. And if we actually break below that, then we'll probably see weakness come in again. And the key would be, I think, the rate cut itself would probably help us, gain the momentum to break past 8660, because that's going to be important in terms of setting the trend. But what we are seeing more recently is very strong breadth in the market. The advanced decline ratios have been very positive, and the mid-cap indices are actually at new highs. So there is a clear divergence between what the mid-cap indices are doing and what the Nifty is doing. And the Nifty itself needs that additional push, I think, which can come from today's event. And if it does not, then that divergence would probably continue between these two segments.
Let's get back to a conversation with Rohit Srivastava. Rohit, if you're talking about the broader trend for this market, you've got some individual stocks that are on your radar as well. Let me start off with Coal India. What's your thought on that one?
Yeah, Coal India has been trending up pretty well, even against the market. It had held out throughout the previous quarter. And we're seeing positive momentum now. So I think there could be a good 5 to 8% upside from here.
All right, that's the call on Coal India. Earlier on we were talking about so many of those pharma stocks that are in news as well. Rohit, I know it's a space you're bullish on. Which are the stocks that stand out to you from the pack?
Yeah, what we saw in the pharma sector is that, they were correcting pretty sharply in the last quarter, and then, the pharma index broke out, giving an indication of a positive mood. But the negative trends that we saw from news in Lupin and also in, Sun Pharma probably, set them back a bit. But we're seeing strength irrespective of that in two counters, which is Cipla and Dr. Reddy. So I think those would probably remain in focus. They've both done well in terms of price activity. The trend still remains up, so I think there could be further gains to be seen there.
Fair enough. Well, what are your thoughts when we talk about some of these auto majors as well? Because we spoke about Hero at the start of the show itself, Rohit, but beyond that, you were talking about Tata Motors. It's had a massive cut, 39% lower from its March peak is what we saw till July end itself. Tata Motors is one. Beyond that, any other stock from the auto pack that's on your radar?
Yeah, so what's happening in the auto sector is that you're seeing very mixed trends. Say, for example, Bajaj Auto, it was actually falling against the market in the Jan, Feb, March period, and then actually rallied back to get back all its gains. The fall itself looks like the start of a downward trend. So I don't think there's too much upside on Bajaj Auto. It's already moved up a lot. But at the same time, we've seen the same happen now in Tata Motors. You've seen it fall in what we call 5 waves, which means the trend is down. But it's become very oversold, so which is why I thought that it could probably give you a rally similar to what we saw in Bajaj Auto. Now you might see Tata Motors actually move up, but it's not an uptrend. I think it will probably be a good trading rally that you could get a retracement of the sell-off that we've seen. And I think the only stock which are actually performing is Maruti. And another one where I think you could see strength is probably Mahindra and Mahindra, which has been holding out for quite some time. And it's seen some gains, not significant gains, but I think there is still potential for more upside on M&M. So those are the two stocks that stand out within the auto pack. The others remain in downtrends and they're doing their own thing. They're not really, the whole sector as a whole is not really correlating. So you have to look at what each individual name is doing. My sense is, like I said, Bajaj Auto and Tata Motors in downtrends, but doing different